If you're buying, fixing, flipping a house, it's important to understand how the renovation funds are dispersed. The terms rehab, renovation, or construction draws all kind of overlap, and most lenders do have a similar process. Hi, my name is Jason Ballin from Hard Money Bankers. I've been lending private money since 2007 with Hard Money Bankers. We've done over 4,000 loans, and I'm very familiar with the construction draw process because we typically have 250 loans or so on our books, and the majority of them have some sort of construction component. Um, so it's important to note, first off, that funds are typically dispersed only on completed work. So a lender is not necessarily, you're not going to just buy a property and let's say the lender, it's like a $50,000 renovation budget. The lender is not going to be like, oh, here's your $50,000, go do whatever. They typically draw the funds out through a draw schedule, and the funds are reimbursed only on completed work. And the reason that this is the case is the lender is basing your loan on a fix and flip on the after repair value, not the as is value. So they're basing it off of the property being fully renovated and complete, not today's value, not complete. That's why they need to ensure that the work is getting completed before they reimburse you those funds. It's also a way to protect you, right? Because you have a layer of protection of your contractor. You don't want to just give your contractor $50,000 up front, and then all of a sudden they don't end up doing the work. You only want to pay for the work that's done, and the lender will reimburse you for the work that is getting completed in a draw schedule. Let's go through a quick case study. So let's say you buy a property for $100,000 and it needs $50,000 in work, and it's going to be worth $200,000 ARV. So let's say a typical hard money lender will give you 80% of your purchase price, 100% of your construction costs. So 80% of your purchase price, so 80% of 100,000 is 80, and then 100% of $50,000, which is the renovation budget, is 50. So what ends up happening is you'll do a total loan of $130,000. 80,000 is going to be dispersed at closing, which is going to go towards your purchase money. And then $50,000 is going to get held in a construction reserve or a construction escrow, and it'll be reimbursed as work is getting completed. So let's say you do some demo, you do a new roof, maybe you start some electrical wiring, and you go back to the lender and say, hey, I did $10,000 worth of work. Can you reimburse me? Typically, the process is they'll send out an inspector, verify that the work is getting completed or the work is completed, and then they'll send you the $10,000 and you can send that to your contractor, and then you can keep it moving, keep it moving, keep it moving. You want to keep this kind of a seamless process. Now, if you did this through a bank, the process would be similar, but the process would be, a lot bigger of a pain, and it would be delayed. Banks would have their process where it's like, okay, fill out a draw request, send me over this, let's do some lien certificates, send me all your paid receipts, and we'll get an inspector out there in a week type of situation. Like that doesn't work for most fix and flip borrowers who, number one, you need cash flow management to keep these projects going, but you need to get your contractors paid so you can keep the work getting through. And that's kind of the traditional way to do it. Make sure you talk to your lenders so you understand the draw process because it's an important process. And most of the stuff that we do internally, we learned this, when we started in '07. We talked to a lot of borrowers and they're like, I need to get draws like the same day or the next day. So we're able to accommodate that. We put systems in place where you need a draw, go to our website, fill out our draw request form, and immediately goes to our inspector and our portfolio manager. They make arrangements to get out there. Hopefully, if the property's on lockbox, it makes it easy, right? Because they can get out there later that day or the next day. If you have to meet them the next day, go verify all the line items are completed. Maybe they'll have some questions, and then the following day you can get your funds back in your account in like 48 hours. So that's a good process. It's important to talk to your bank though or your lender so you know what their process is and their timeline so you can in essence do it responsibly. Now, obviously on the front end you want to do some sort of scope of work or have a contract with your general contractor who's working with you. And it's important to follow state and local jurisdiction laws, have a licensed contractor that's insured and bonded and knows what they're doing. Yes, sometimes you might be the general contractor of the project and sub out trades, and that's fine as well. But it's important to put the right scope of work in place so you understand what's going on. the contractor knows understands what's going on, and the lender understands what's going on, because typically that scope of work is what you're going to follow with the lender. Now, most lenders, including ourselves, recognize that not every construction project goes as planned. And let's be honest, like 99% of them don't go as planned. And there's always change orders or time delays, or I couldn't get these kitchen cabinets in because they're back ordered. So we had to skip that part and do this instead. And that's fine. It's important to communicate with your lender and your inspector to get everything going. Now, one popular thing in this industry that you might have heard is Dutch versus non-Dutch interest. And I like to bring that up because most banks do non-Dutch interest, and there's benefits on it. But then a lot of hard money lenders will do Dutch interest. So Dutch interest is when the borrower is charged interest on the entire loan amount from the beginning of the loan. Most private and hard money lenders are always doing that. So in the scenario that I said earlier, you buy a property, the lender gives you $100,000, $30,000 loans, 80 towards the purchase, 50 towards the renovations. You're getting charged interest on that $130,000, even if you're not fully utilizing it on the front end, right? And that's a thing to keep in mind. So in essence, yeah, you're going to be paying interest on some money that you haven't necessarily taken yet. But in the grand scheme of things, most of these projects move pretty quickly. It doesn't end up, costing that much more money. And it's also good peace of mind to know that your lender took that $50,000, put it into a separate account, and is, using that only for your construction money. The last thing you want is to go to a lender, 6 months down the road when you need a draw and they don't have the funds. So I think it's important for private and hard money lenders to make sure that the funds, they're doing Dutch interest and the funds are getting set aside and they can't use them for anything else. And they're only set aside for your particular project, compared to non-Dutch interest, with banks do, and they only charge on the funds that are already dispersed. But if you actually do the math, because these projects are quick turnovers, it doesn't cost all that much extra money anyways, and there's peace of mind to it. So yeah, to sum it up, renovation draws are typically reimbursed only on completed work. You definitely want to talk to your lender up front so you understand the process that works for them. If it takes them a week to do a construction draw, that's not good. You need these things to be done quickly. Your contractors want to get paid. You want to keep this project going. Time is money. When you're fixing and flipping a property, every extra day you're holding the property is costing you holding costs, financing costs, lost opportunity costs. So keep these projects moving forward. Make sure you understand the renovation process. Make sure you help accommodate your lender to supply them with the information that they need to keep this thing quickly. If you need anything from me, again, my name is Jason Bellin at Hard Money Bankers. We've been lending money for a long time. Private capital, real estate investors that fix and flip houses, buy rental properties, own commercial buildings. Happy to chat. Reach out at hardmoneybankers.com or jason at hardmoneybankers.com.